Hello. There is a seasonality trend that occurs in the US dollar in the second quarter, and a quirk that happens a lot in April. What are these trends, and how might they affect investors in US and Canadian dollars? I'm joined by Sean Osborne, Head of Global FX Strategy. Good to have you back, Sean.
It's good to be here.
You've brought me a couple of charts.
Yes,
so
some interesting trends.
Exactly. So the first one is seasonality, which is showing weaker in the US dollar in the second quarter, quite drastically. We'll pull this up. Tell me what's going on.
What we've done here is just look at the average performance of the US dollar against the Canadian dollar over the last 15 to 16 years. That's the dark green line on the chart. And then we're comparing that to last year, which is the lighter green line on the chart. And the goldish colored line is the current performance of the US dollars. And that's all been rebased back to 100. So just to give us a sort of even comparison.
A baseline.
And what it shows quite distinctly is that the US dollar tends to appreciate quite strongly in the first part of the year. January tends to be one of the better months of the year for the US dollar. We consolidate in February and March, typically speaking. And then we turn lower again in April. And April is a very definite down month for the US.
Significant,
yeah, it's pretty significant, pretty
chart.
severe, and pretty persistent. And that's exactly what we've been seeing this year. We're calling it a kind of GPS roadmap for the US dollar against the Canadian, because it's been so precise, very accurate turning points and trends for the US dollar. So far this year, it's been a great story, and it's been it's been a great message to get out to our clients, because it's told us more or less exactly what to expect and when to expect it.
Now, is this normal?
Well, I guess it is normal if it's a seasonal trend. We know this
season. Does it happen all the time? Or?
We can see that it's fairly persistent. Yeah. The flip side of this is that the US dollar tends to rally quite strongly in the second half of the year. So our message is that after this weakness that we expect to see over the next few weeks, we would expect to see a reversal of that trend in the second half of the year. So we do strongly expect the US dollar to rally to reflect not just seasonal trends here, but we think the seasonal trends coincide with the macroeconomic evolution and developments that we expect to see in the second half of this year. So we know the seasonality in other markets. In equities, the selling May and go away story, we're very familiar with that. Commodities and bonds also have an element of seasonality to them. I don't know why they persist. I don't think anyone's really sure. They should be arbitraged away once they're observable in the way that these trends are, but they're not. And they do tend to persist, and they do tend to be quite significant.
So let's look at the second chart you've brought me, specifically drilling down on that April effect. What is that?
We're just looking at the monthly returns of the US dollar against the Canadian dollar over the course of the April month, and looking at the last 16 years, and we can see that over that period, 12 of the last 16 Aprils, in fact, have seen pretty significant dollar declines. And lo and behold, we're seeing that again this year. The Canadian dollar is the only currency that's making of the G10 bloc that's making significant gains against the US dollar so far this year. The gains are in the region of 3%, so it's a pretty significant April effect again for the Canadian dollar.
That's very interesting then. So we're seeing this again. Where does that take us then, looking out to the rest of the year? I think in a sense, the seasonal trends are fully supported by developments in the markets that are driving these movements. In other words, oil prices have firmed up. That's good for the Canadian dollar. We've seen US interest rates drift lower, whereas Canadian rates have stabilised or moved higher, as the Bank of Canada seems to be telling us that they think they've done enough in terms of monetary accommodation and that insurance move that we had in January. I'm not too sure about that. That's still to be determined. But nevertheless, the fundamental developments are fully supporting this trend that we typically see over the course of the calendar year so far. And looking out into the second half of the year, we would expect the fundamental developments again to support a stronger US dollar. Despite the slowdown we're seeing in the US economy at the moment, we're fairly confident that the US economy will rebound. It has priors in this sense, in that the first quarter of the past 4 or 5 years have been very disappointing from a growth point of view. Last year, in fact, was negative in the first quarter, but we turned around very quickly in the second, third, and fourth quarters to record growth closer to 3% for each of those quarters. And we expect to see something similar this year. So we're not too concerned about the temporary slowdown, weather-related slowdown. It's been Snowmageddon or the spring swoon, the soft patch every year for the past 4 or 5 years. There's been some reason. The Arab Spring was another reason why things weren't quite panning out as expected in previous years. But we think once we get beyond this short-term softness in the US economy, growth will resume, and will resume quite strongly. That's been the way of the world for the US economy for the past 4 or 5 years. And that should give the Fed the opportunity, I think it's looking for, to raise rates later this year. We don't think June. We think most likely September. That's been our call for a number of months now.
But higher interest rates and stronger growth in the second half of the year is going to be tremendously supportive for the US dollar and probably will propel it quite significantly higher, very much in keeping with this seasonal trend that we've seen for the US dollar against Canada in previous years. The second half of the year tends to be much more positive for the US dollar. So despite the weakness that we're seeing at the moment, which we think might extend in dollar Canada terms down to the high teens, we may see the Canadian dollar appreciate to around about 84 cents US in the next month or two. By the end of the year, we expect dollar Canada to be closer to 130 or 77 cents, roughly speaking.
Okay. Now that's very interesting for investors that want to get into the U.S. market. It sounds like shortly may be a good time to do that. Yeah. What are the risks to this plan?
The biggest risk we have, I think, in the forecast is if we're wrong about growth picking up and we're wrong about the Fed.
And I guess there could be anything happen.
And there are a number of other issues out there. The Chinese economy seems to be slowing down. The government there is trying to provide more stimulus, so that's something people are definitely keeping an eye on. The Eurozone economy and the Greek situation, again, is starting to become something of a concern for investors. We're not quite sure
how much that will weigh?
How much that will weigh, if at all, on the euro, and what contagion risks there might be to the Eurozone and perhaps more broadly in the event of a default, for example. So there are, as ever, a number of risks around the outlook. But the biggest risk, I think, for our forecast, to our base case view, is that the Fed doesn't deliver. If growth disappoints and doesn't pick up in the way that we expect it to in the second, third and fourth quarters, if we're wrong about the Fed, we're going to be wrong about the dollar.
All right. Well, definitely something for investors who are interested. I know a lot of people have said, oh, I'm too late. Maybe now is their opportunity.
We always get a second chance with the Canadian dollar. I think there's a buying opportunity for the US dollar coming up here. I think levels closer to the 119, 120 area are going to be very attractive for people who thought they missed the boat in the past few months.
All right. Thank you very much, Sean.
Welcome.
I've been joined by Sean Osborne from TD Securities. Thanks for watching. I'm Marianne Devaney.